Welcome to Creating Wealth with Jason Hartman. During this program, Jason is going to tell you some really exciting things that you probably haven't thought of before and a new slant on investing. Fresh new approaches to America's best investment that will enable you to create more wealth and happiness than you ever thought possible. Jason is a genuine, self-made multimillionaire who not only talks the talk, but walks the walk. He's been a successful investor for 20 years and currently owns properties in 11 states and 17 cities. This program will help you follow in Jason's footsteps on the road to financial freedom. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to the Creating Wealth Show. This is your host, Jason Hartman, and this is episode number 177. Thanks so much for joining us today, where business is booming, people are terrific, and life is wonderful. Anyway, that's all true and it's all good, huh? We are really seeing people out there that are sensing a very, very good opportunity to be buying income property nowadays. And in most of this show today, we're going to talk about marketing. We're going to talk about your personal media empire. We're going to talk about podcasting. If you've ever been interested in producing your own show, we will talk about that today with our guest, the podcast answer man, Cliff Ravenscraft, who will be here in just a couple of moments. But before we get to Cliff, I'd like to talk to you about a couple of other things. Where should I start today? Well, let me first start with a book recommendation. I am going through a fantastic book right now, and I want to recommend it to people who really want to understand the way the world works based on economics. And as a listener to this show, I'm sure that is you. Thomas Sowell, you may have heard the show when I had Thomas Sowell on. He is a real scholar, a great thinker, and he's written many books, but one of them that I am working my way through right now is called Economic Facts and Fallacies, and it is just really, really interesting because he explains in real depth how things work, whether it be in housing markets and how government manipulates and changes housing markets and causes housing disruptions with false markets. One of these examples would be that silly tax credit that we had that expired a couple of months ago. In the automobile world, it would be cash for clunkers. The government just perverts and changes motivations every time they get involved. But the book is very interesting, and he also talks about as it relates to academia, to the university system, and just a very, very interesting book, and I'd really recommend it. And then, of course, I'd recommend, if you didn't listen to it, the episode where I interviewed Thomas Sowell, and he was just a fantastic guest, so go back and listen to that one as well. I don't have the number of that show offhand, but you can find it at jasonhartman.com and, of course, on iTunes. The other thing I want to talk about is about the concept of our network, and that's my real estate investment business here I'm referring to, Platinum Properties Investor Network, and how it differs from some other companies. And I was talking last week to a group who is recommending investment properties, and they're established in one particular market, and they're recommending them and really going out and marketing them, versus where we work in some markets with real businesses and companies that are engaged in buying properties at foreclosure auctions, rehabbing them, and then they will work through the channel of having us market them and recommend them to investors. That is different from the groups that go out and pick a market where they have an established presence, as do the big national real estate firms, whether it be Keller Williams, RE/MAX, Century 21, Coldwell Banker, Prudential, all the rest. Those companies have established presences in various markets. And I think this is really a negative thing in many ways. Why do I think that? Well, I've often talked about my 10 commandments of successful investing. And one of those very important commandments is, thou shalt be area agnostic. And one of the things that I think is good for you, our client or our potential client, about working with my real estate firm is that we don't have an established presence in the markets we recommend. Now, that would seem sort of like, well, gee, I want to work with one of these big national franchises because they have an office in that market. Well, that perverts motivations, in my opinion, because they have a stake there. They've gone to the trouble of leasing an office there or building a building in that market, and they're attached to that market. We're not attached. We actually are disloyal to markets. And as such, as we are disloyal to markets, we bring to you, the client, a better, cleaner, less self-interested recommendation when it comes to investing, because we are disloyal. All we have is an agreement and a virtual presence in each of our markets. Now, an example of this would be the fact that we have deals with brokers, rehabbers, builders, banks, just relationships in 43 different cities nationwide. And we've looked at international properties in many markets too, and we have relationships with people we know in various other markets that we have not actually signed deals in. But if you asked us right now, what markets do we recommend, our list is pretty short because we're in some pretty challenging economic times right now. And it is hard to be a standout market based on the current economy and the current situation out there. And as such, we have signed deals in 43 markets. We have no offices in any markets. We're based here in Southern California, but we could easily move out of this market. But we've been here so long. I've built my career here for 20 plus years now in the real estate business. And we're disloyal to these markets. So we have no big interest in recommending a specific opportunity. And this just kind of came to me when I was talking with this group last week. An interesting thing to do, by the way, is whenever you talk to someone or you get an email from them and it has that address at the bottom of their email signature. I find myself doing this more and more. Maybe I'm getting a little compulsive or a little nosy or something, I don't know. But I'm now taking and pasting that address into Google Maps. And I look it up, and you can look at the street view and see a picture of their office, for example, in that market. And in doing that, it's just kind of interesting. You see how established their presence is. And I say that it's a bit counterintuitive, because the more established one's presence in a market, the less objective their advice to you, the investor. So we don't have a presence, a physical presence, a long-term commitment in any of these markets. We're disloyal. And as soon as the market stops making sense, as soon as there is no really good inventory that's really compelling there for us to recommend, heck, we're gone. We're disloyal. Now, we may have clients who have purchased in that market, and our own staff many times has purchased in that market as well. And we still service them because, remember, we offer free rental coordination for life. As long as we're around, we're happy to help you with your rental coordination forever. But we don't recommend people buy new properties in these areas if they don't make sense, because we are truly area agnostic. Now, if we were to go open up offices in these markets, hire staff in these markets, buy or lease office space in these markets, we would really have a very self-interested view of these different cities, and we don't. And that's a great thing. So be area agnostic, be diversified, be in control, follow all of my other 10 commandments of successful investing. So let me talk to you about a couple of properties real quick, and then we'll just have a few more mentions, and we will talk about building your personal media empire. And if you've ever been interested in creating your own radio show, podcast, you'll really like the interview I have coming up with the podcast Answer Man. First property, Dallas, Texas, where there is barely a recession, even though we're in the midst of the worst economy in 7 decades. So here we've got a property that you can purchase for just over $35,000 down payment, of course, subject to qualifying. That would be your 25% down. Your cost per square foot is only $74 per square foot. This is a newer property. Again, we are constantly turning down this old junk, these money pit properties that people are calling us, asking us to recommend, but we just are not interested, at least not so far. The deal would have to be incredibly compelling for us to be interested in those. And here, the cash flow on this property is positive $206 per month. But there's one more thing I want you to see. The cash flow, based on a projected rent of $1,250 per month, is positive $206 per month, but $103 is principal reduction. So truly, your positive cash flow is $309 per month, because $103 is paid toward principal reduction. So if you look at it that way, it's really $309 per month positive cash flow. Your overall projected return on investment here is 24% annually. You've heard me say many times, even if it only goes half as well, you'll be looking at a 12% ROI on that deal. Another really nice looking property here. This one, I'm going to move to Denver. We're going to cover 2 D cities today. This one's in Denver, and it is a newer property. You can acquire this property subject to qualifying based on 20% down for $30,800 that you'll need. And the projected rent is $1,250 per month. Remember, Denver's a little more expensive than Dallas. And your positive cash flow is $237 per month, with an additional $151 per month in principal reduction. So let me just do my math here on my HP12C ancient calculator, but I love these HP12Cs. I know they're so old, they're just like the standard in the industry from a long, long time ago, but I still love them. I have 4 of them, I think, maybe 5. Keep one in my car, one on my desk, one at home, one in my briefcase, etc., etc. So overall here, your true positive cash flow is $388 per month. Your projected return on investment here, 35% annually, and that is in beautiful, beautiful Denver, Colorado. Last one, I'll move back to Dallas here. This one is $105,000, and it's going to take about $31,500 to buy it based on 25% down. Your projected rent is $1,150 per month. Positive cash flow is $206 per month. Again, odd that that's the same number, but your principal reduction on this one is $93 per month. So I'm going to add those two together for a total of $299 per month. In true positive cash flow, you could call that. Projected return on investment here is 25% annually. Folks, what are you getting in the bank? A whopping 1%? I mean, think about it. These are phenomenal opportunities nowadays. One of the best times to be investing in good income property in the last several decades. Another distinction I want to make here is that I was having a debate with one of these stock market guys last week, and then I talked to Doug this morning, and he came up with a good sort of way to put this, because this is what people don't understand about being area agnostic. They talk about the real estate market as though it's some national phenomenon. In a country as large and diverse as the United States of America, there is no such thing as a national housing market. My packaged commodities theory. So this stock market guy, yesterday he's talking to me about the CRB Commodities Index, and he's doing some technical analysis on it. And his analysis, because he's a deflationist, and I always debate this with him, although he doesn't really make sense, but I still debate it with him because it's fun and frankly, it makes my thoughts more refined when I debate these things with people who really disagree. And he's saying that commodities are going to decline in value a little bit more before they come up in value. Well, fine. Even if he's right, and I don't know if he's right when you're looking at the actual commodities exchange, but we're buying commodities for 1/2 to 1/3 of their price today. When we buy packaged commodities, packaged is a real estate investment, an income property investment. So I was talking to Doug this morning, and he made a great distinction. He said, look, don't invest in housing, invest in shelter. Think about that. Don't invest in housing, invest in shelter. In other words, when you hear these talking heads in the media, you read stuff, and they talk about this quote-unquote housing market, that just makes my blood boil, because they don't make any sense. The housing market where? In Miami, Los Angeles, Chicago, Dallas, Denver, Seattle, Kansas City, Indianapolis? Where is the housing market? The fact is, it is dramatically different in all those places. And remember, my theory of the Hartman risk evaluator, we evaluate our investments based on the LTI ratio, the land to improvement ratio, where we are looking for cheap or free land. We're looking to acquire income properties at or below construction cost, sometimes 1/2 to even 1/3 of replacement or construction cost. And the land is just free. You don't even have any land in the equation. Well, in places like California, land is still a huge component. I wouldn't touch California yet. It's too early, and California is a dying state, a massive disaster of epic proportion. That is my home state, the Socialist Republic of California. Illinois is in pretty tough shape too. Have you noticed that when you look around, all of the countries, all of the states, all of the cities that have had big, overreaching, pseudo-socialist governments where the politicians have been liberal, they have spent these places into oblivion, those places are going broke. Their economies are a disaster of epic proportion. Yet you compare them to the places where the government has stayed out of the way a little bit more of a laissez-faire attitude. I think even in those places there's still probably too much government, but the economies are much healthier in those places. I'd say, look, Mr. Obama, the best thing you can do for America is get out of the way. We'll solve the problem. Those of us who are listening to the Creating Wealth show, we're the value creators in the economy. Government is not the solution. Government is the problem. It has always been that way. Now, you need a certain minimum amount of government to avoid anarchy. I'm not an anarchist. I'm not an anti-government person. I like government. I just like to keep it small and keep it in its place. And government has overreached, and as it's overreached, it's regulated people out of existence. Businesses and people have fled these places, and they're still fleeing these places. And if you want to bring them back, look, Arnold, the governor of California, the governator, the guy that we thought was going to fix all the problems left over by Gray Davis, it's really only gotten worse in California. And that's because the government just won't get out of the way. The government needs to step back. The people are the ones who will solve the problems of getting the economy started again. Do I think this will happen in California anytime soon? No, I don't. I am going to make a statement here, and I hope I don't regret it, and I hope I'm wrong. I just want you to know, for the record, I hope I'm wrong when I say this. But I think California, my home state where I have spent the vast majority of my life, may be beyond the point of no return. The unions and the special interest and the politicians run this state, and I don't see how they're ever going to get out of the way, and I don't see how it's ever going to get better. There will probably be a federal government bailout. They'll print more fake fiat money, which is inflationary, by the way, to bail out the Socialist Republic of California. But I think California, it's probably just kind of over. So I hope I'm wrong, but I think California has some pretty tough times ahead. Okay, enough of my rant here. Thank you for tolerating it. What else? I want to thank Philip Sullivan. He sent me a great newsletter called The Early Warning Report by Richard Maybury, and we should probably get Richard Maybury on the show. Interesting guy. He's pretty doom and gloom. Maybe we'll have him on the Holistic Survival Show. Philip, thank you for sending this. I will hand this over to Brittany and ask Brittany, our marketing manager, to see if we can invite Richard on the Holistic Survival Show. Maybe the Creating Wealth Show. We'll see how positive or negative he is, and then we'll decide. We talked about properties and business overall. I want to tell you, people are coming out of the woodwork to buy these good properties now. And if you haven't done so yet, get in the game. There are great opportunities out there. There are some terrible opportunities out there. I think I just alluded to that in my little rant. But in addition to that, join us for the Creating Wealth in Today's Economy event, where we take into account all of the doom and gloom and the positive news and sort of put that all together to show where the opportunities are, where the silver linings are in this very dark cloud hanging over our head today. Again, I'm not an optimist. I'm an opportunist. Someday maybe I'll be an optimist again, but right now I'm an opportunist. And there are always opportunities created in the midst of chaos, in the midst of disaster, and in times of crisis. That's when many, many new millionaires are created. So hopefully you can join that and become one of them. Join our text club from your cell phone, 411 24/7, 411-247. Text keyword Jason, leave a space, put your first name, and then another space and put your email address, and we will send you some special promotions, freebies, and things like that. One of the things we'll probably be doing on our text club here is giving away a copy of our white paper. Now, 8 months ago now, we published our white paper, and we sold a whole bunch of those for $25, and our white paper has now become a little dated, so maybe we might just offer that as a freebie to members of our text club. So be sure you join, because we got to write a new white paper now that we're 8 months into the year, and we'll see how our predictions pan out. In the white paper, which is 40 pages long, we predicted 35 real estate markets around the United States based on an overall picture of ROI, return on investment. We're the only ones that do this. And we made some really interesting predictions where we didn't just look at appreciation and depreciation in all these markets, but we looked at income and we looked at leverage to give a true overall picture of return on investment, because real estate is a multi-dimensional asset class, or I should say income property. So join us on the July 31st for our Creating Wealth in Today's Economy event. That'll be at the Marriott Hotel in Costa Mesa. We've had several events there before, and we look forward to seeing you. Register at jasonhartman.com. And again, thank you so much for recommending the Creating Wealth Show to your friends. Check out our other shows, the Solomon Success Show, the Heroic Investing Show, the Holistic Survival Show, all of that other good stuff. And now let's go to the interview where we talk to Cliff Ravenscraft, the podcast answer man, about building your personal media empire. We will be back with Cliff in just a few short seconds right after this.
Now you can get Jason's Creating Wealth in Today's Economy home study course. All the knowledge and education revealed in a 9-hour day of the Creating Wealth Bootcamp, created in a home study course for you to dive into at your convenience. For more details, go to jasonhartman.com.
It's my pleasure to welcome Cliff Ravenscraft to the show. He is an expert on podcasting. He is the podcast answer man, actually, and it's great to have him here. As you listeners know that have been following me for a while, I've had a lot of success with podcasting. I absolutely love it, and it's great to have an expert like Cliff here to talk to us about it. Welcome, Cliff.
Well, thank you, Jason, very much. I'm very glad to be here.
I think there are several areas of competency for a podcaster who wants to expand their brand, develop a following, or as Seth Godin calls it, a tribe, and really get a following out there. They may have a business they want to promote, a cause they want to promote, a political belief, whatever it is, or just a general hobby or area of interest. What do they need to start with in their thinking in order to do this properly?
Sure. Well, a lot of people start thinking about, I want to do a podcast. And the first place that many people go to is they think, okay, how do I do the technology end of this? And that is certainly a critical key component. But I want to encourage people, before you look into how do I start a podcast as far as on the web, what equipment do I need, before you go into any of that, there are two things you want to find out. Number one is, what is your passion and what is your topic that you want to talk about? Because that is going to be the driving force of everything. So basically, you want to come up with a thought of the topic that drives me. What is the message? What is the brand? You need to think of, what is the title of my show going to be? What is the format of my show? Am I going to do a 4-minute show weekly? Am I going to do a 35-minute show every week? Am I going to do a 10-minute daily show? These are critical first steps in the process. And also, I want to encourage you, when you're thinking about what is it that I want to talk about, how often do I want to talk about this stuff? The question you also need to ask is, am I sold out, devoted to this topic? Am I passionate about this topic? Am I enthusiastic about this topic? Another drawback to people just jumping into podcasting because they see that it's exciting and people are flocking to it, and there's these tribes and communities being built around it. One of the things that a lot of people will do is they'll say, hey, what can I podcast about that's going to get me a lot of exposure? And that is the wrong way to back into podcasting. In fact, what you want to do is say, what is it that I'm passionate about that if nobody were listening except for 2 or 3 people, that I'd still do this thing because I have a strong desire to even let those 2 or 3 people know exactly how excited I am about this product, this service, this movement, this cause. And so that's where you start. What's the name of my show? What's the topic of my show? How often will I release a show? How long will my show be? That's the place where you start.
Just as sort of as a side note on show length, because I think a lot of people, when they're new to podcasting, they start thinking, well, gosh, I don't have enough to say, and what it usually turns out to be is they have too much to say. How is there sort of an ideal length for a show?
I think so. First of all, I just want to say that I'm a huge fan of weekly shows. Not a huge fan of daily shows. I'm not even a fan of daily shows that are 1 minute in length. And we could talk about why, but for right now, let me just say that the best format overall, and this is across 50,000 subscribers that I have, that I know exactly what they desire, with more than 24 different podcasts that I produce, and I've put out more than 1,800 individual episodes. My audience tells me far and above that they prefer a weekly show. So I'm going to suggest that you do weekly. Now, as far as the format goes, it really does depend on your topic, and it depends on what's required. But I will tell you there's a sweet spot that can fit into almost any person's schedule, and that is a 10-minute or less weekly show. The question is, can you podcast about your topic in 10 minutes or less? If you can, that is a wonderful format. There is hardly anybody out there who's even remotely interested in your content that couldn't fit you in 10 minutes each week.
Some podcasters are really good about releasing their show on the exact same day every week. I just sort of release them when I release them. I'm not saying that's the best practice, and sometimes we release several a week. Some listeners have told me, I think getting people in a cadence of doing it on an exact certain day is a really good idea, which I think that is a good idea. I've never done it, but sounds good. Thank you for listening to the Creating Wealth Show. This is Jason Hartman, your host, and we appreciate you following the show. We have many, many episodes, hundreds of episodes, and some of the older episodes have been archived and placed in our members section, and that applies to this one. So we include a sample that's about 25 minutes long, and then for the rest of the show, you can go to our members section at jasonhartman.com. Many of the other shows are still in their full-length, complete version. However, some of the shows, like this one, are in our members section where you can hear the show in its entirety. And again, you just need to go to jasonhartman.com and you can get the full show there in the members section, plus a whole bunch of other great members benefits and resources, whether it be documents, forms, contracts, articles, other video and audio content. Just a great resource. So be sure to join as a member at jasonhartman.com. And thanks again for listening to the Creating Wealth Show.
This show is produced by the Hartman Media Company, all rights reserved. For distribution or publication rights and media interviews, please visit www.hartmanmedia.com or email media@hartmanmedia.com. Nothing on this show should be considered specific personal or professional advice. Please consult an appropriate tax, legal, real estate, or business professional for individualized advice. Opinions of guests are their own, and the host is acting on behalf of Platinum Properties Investor Network, Inc. exclusively.